Good morning and welcome to the inaugural episode of the Crypto Parabellum podcast with Jared and Alan. Alan, how are you? Good morning.
I'm doing well. Good morning. It's good to be here with you. I'm glad we're finally doing this.
Yeah, no kidding. We've been talking about this for a while. Alan and I go back quite a long time in the crypto sphere. I mean, ages in the crypto world, but not so much in any other world. And we've been talking about doing a podcast for a really long time, something that whenever he and I speak, we have really good conversations, and we come from different perspectives. I think you'd agree with me on this, Alan. I'm more of a trader by heart, and Alan is a builder. You've been a builder not just in crypto, but outside of crypto. You build companies, you've sold companies. Obviously, you have stacked, and so we kind of look like the trader and the builder, and we both love crypto. Is that a fair approximation?
Yeah, I think that's a perfect description. I think it has the potential to make for an interesting conversation because it paints the full picture. Crypto is an interesting space where, a large percentage of the participants are only here to trade, and that's totally fine. There's another whole subsegment of the market that's only here to build companies or only here to build projects. And a lot of times there is an overlap between those two groups, or one isn't the best at the other. That's certainly the case for me. And so I think it's an interesting dynamic.
Yeah, me too. And what's funny? I think there's something that, like everything, those who trade want to build, those who build want to trade. It's like I would love to build a company. That'd be amazing. Like, this is trading so hard. And you're like, man, building's really hard. Trading, if you just know what you're doing, you can just turn around a profit pretty easily, chase a narrative. It's so funny that you like the grass is always greener at times. I think we both love what we do, but certainly I think there's an element of that. So we have a list of topics that we're going to run through today, and what you can expect from us is raw opinions. I think I come off fairly R-rated in my opinions, and I don't hold back, and I think Alan does the same thing, just in a much more politically correct way than I do. And I think that's going to work really well. So we're going to run down a list of things. So we're going to talk about what's happened with 3AC, what Sam is trying to do to help out part of the mess up that 3AC created. We're going to talk about an article, the Bitcoin versus Ethereum conversation, which is kind of buoyed in utility. And that's something that's been stewing for a long time. But I think first and foremost, I want to ask you a question I haven't asked you yet. When you heard about 3AC, about Three Arrows Capital, and them essentially defaulting, when you first heard, what went through your head?
I think I was surprised. Well, of course I was surprised, but I think I didn't totally believe it in some ways. I think 3AC did an amazing job of building a reputation, better than anything else, better than building a fund, better than creating good returns, better than being involved in every early project. They built a reputation. And we've sort of like seen that before in crypto. You have these I don't know, these arcs, these story arcs, these narratives that have rippled through crypto. You had like the untouchables. Yeah. There was a time when Arthur Hayes was God, right, amongst men. Then you had sort of like the SBF arc, and then you had the 3AC arc. Or excuse me, before that you had like the jump arc, and it's quite interesting. But I think my story for 3AC, I heard some of the like insolvency rumors. I would say about 3 to 5 days before it was actually out in public. And at that point, my first action was to take all stable coins or assets that I was lending and pull them out of every single provider. And so for me, that was Celsius. That was also BlockFi. I had, well, just as everyone else, Celsius is sort of all open term loans as far as I'm aware. So those were easy to pull back. Got those out. But with BlockFi, I had longer term loans. So if you have a larger sized account with BlockFi, they'll give you an account manager. Now I wonder how much of this is I'm supposed to be public, but they'll give you the opportunity to do longer term loans, right? And so all that means is you can negotiate a rate, and your funds are now locked for, let's say, 3 months, 4 months, 5 months. You don't pull them out, whenever you'd like. Now, I was able to pull those back. I had to pay a penalty to kind of close that term loan and pull it back. BlockFi, in my opinion, went through a perfect stress test, at least in my experience. I assume that was the same for others. They provided liquidity. It took them 48 hours from the time that I said, hey, I want to call this term loan. I paid the penalty, and they had it out in 48 hours. They were calling me and saying like, hey, they didn't try to convince me to continue that loan, which I think a lot of firms did, and that was sort of a red flag. There was no convincing, hey, why don't you stick around? Everything's going to be fine. They said, no problem. We'll provide liquidity, and did. And so,
which come to find out was sort of what 3AC was kind of begging people before they really told everyone the truth. Like, no, let's just, let's keep this going. We'll show you next time. Like you said, to the red flag point. Sorry to interject.
No, I it's a good interjection. I mean, that's completely accurate. So to go back to your original question, was like, I didn't fully believe it, but there was enough smoke to potentially have a fire, and I wasn't willing to take that risk. So I pulled those loans back, and I advised my family really to do the same. I had a family member that's now locked in Voyager.
Really?
They had a sizable amount. They had a sizable amount there. And as of the time that I said, hey, you should pull out, they were doing 10K a day. So there was about a week and a half where they could do 10K a day. So you can kind of figure out, what that ended up looking like. There's still some money locked there. So, it's more, I have personal feelings about this topic, because other than just the industry that this will give a black eye to for years and years to come, and all of the regulation that will now occur. And you can argue whether that's good or bad. This is personal for me, because family members now had a bad crypto experience. So
point you made was, disbelief, and I felt the same way. I was like, no fucking way those guys are that dumb, man. There's no way they would have gone that deep and under or no collateral loans, and left themselves open to something like this. And the first thing you said was they did a great job of creating a reputation. Yeah. 100% reputation based. Because like my story, which but I got into this because of, our mutual friend Joel trying to get me into it in October of 2019. It was when I first got into crypto real. I've been trading since 2013. But I remember hearing about 3AC and Sue like fairly early on when I was trying to learn about alts and like, oh man, Sue's a legend, man. If he's into something, you want to be into it. And I run with a bunch of degens who that's what they look for. They look for smart people, and they try to wallet track, and we all pay the crazy money for Nansen, and we've been tracking their wallets. And they had this ability, just because there was a 3AC labeled wallet or a rumored wallet. Here's the personal wallet of Sue or Kyle or whatever it may be, or Quan, which by the way, no one talks about him. The third one, like if you found I'm saying his name wrong, QIAN. If you could see one of their wallets and you saw them buy something, you would sprint and go, holy shit, I have to get in on this because it's probably going to pump. And it did for almost 2 years. Every time they bought something, there was a rip. And the more I read about what they did and how they exposed their clients, I think it's fairly safe to say these guys were grossly underqualified for the amount of money they were managing. And they were making moves like some guys that I know trading out of apartments in like rural Kansas were making triple leverage loans on speculative bullshit because their reputation in what I just described, where if you saw them buy something, people would follow, their reputation bailed them out of a lot of shitty moves for a long time.
I think you're probably right about that. And I would say that it might be important to kind of go back and talk through how they got to where they are today. Sure. And sort of like all the problem points. Because the first, I think a lot of people think the first problem point was the Terra Luna trade, which was a big problem point. But actually the very first problem point, that at least I'm aware of, it probably wasn't the first, but the first that I'm aware of was actually the Grayscale Bitcoin Trust trade. So, and so like that was the first trade that really got them in trouble. And it's possible that ever since then, they were trying to fill a hole with additional loans, with additional risk on Lunaterra. So
additional returns, we have this static return month over month that can service this, yada, yada, yada.
Right. And so if I had to guess, if I had to like throw a dart at where I think it started, it was the Grayscale Bitcoin Trust trade went bad on them. And the story on that is a trade that had a premium. It's a terrible product that is only around because the SEC refuses to put out a good spot ETF product. And so we have to have these weird futures ETFs that have rolling cost, and we have to have these trusts sort of set up so that, you know, average everyday people can get Bitcoin exposure in a retirement account or a general brokerage. So Grayscale went from trading at a premium to a discount. So it was trading above NAV and went then below NAV. That was a problem. Then you had Do Kwon sort of kicked off the next leg of the potential problem for 3AC. Then, and even before that, they as in 3AC starts going to projects and saying, hey, we'll fund you. So great, you get our name. Let us manage your treasury for you. And we'll give you something like 10% a year, I think was oftentimes 10 to 12% a year was oftentimes advertised. The interesting part
they were quoting the Terra returns.
Well, that's what I was going to say. Is the interesting part about that is the timing that it went from a 12% return to a 10% return when they made that adjustment was the same time that I believe Terra went from 18 to 16 or 20 to 18. I don't remember the numbers exactly perfectly, but it was a very interesting decrease of 2% at the exact same time. So then you had Do Kwon sort of kicking off the next leg, and then it was all dominoes from there. And so there are lenders that have really good reputations that I think run a good business that are massively hurt but not insolvent. And so those would be like Genesis. Genesis has been public about the fact that they took a massive hit. BlockFi has been public that they took a massive hit. Those were not uncollateralized loans. They were under collateralized. They were not over collateralized, but they weren't uncollateralized. That's important.
Sure.
The places where you saw problems, Celsius had their own problems, but Voyager. You have now Voyager with, I believe, $650 million hole in their balance sheet with customer assets being lent out. And so I think that potentially we can now segue into, you know, what happens as a result. There's a bunch of contagion that spreads through the market. I think the majority of that is over. A lot of the lending desks that could not stomach the hole, they're done. The desks that can stomach the hole, whether they're happy to do so or not, they have. And so I think they'll probably continue. That cleans up CeFi lending. That's good. Now, I think you have Alameda, SPF, like how you want to relate those to each other. It's probably more like SPF.
Yeah. So hold on one second before we get into that, because I do want to get into that, and we certainly will, and I think we should. And this is going to be an interesting conversation for weeks to come. You know, the Grayscale Bitcoin Trust, I don't think a lot of people understand the mechanics of it. And I'm going to explain it the best way that I know how. But I think the 3AC was taking loans based off assets in the crypto sphere to get Bitcoin to essentially ship to the GBTC, because there's two ways you can buy it, like most people do in their 401ks, or you can essentially deposit Bitcoin, right, for percentages, shares of the company, which when it's at a premium means you're getting a return.
There's some redemption
period. That's essentially how that works.
It was 6 months. There's some redemption period.
It's a 6-month lock. So when everything was going bananas and you're rolling in and crypto's up, you're getting a premium when you deposit, and then it goes up anyway, right? So let's say I deposit $50,000 worth of Bitcoin when Bitcoin's worth 55,000, or, you know, when it's trading at a premium. So like you put in 50, you get 55, and then the price goes up to 69. Like you're getting a premium and the additional returns on those premiums. So it was a very easy thing to do in a bull market, in a generational bull market, because you could wait those 6 months. But that was assuming that super cycle was 100% true, because if you're balls deep into that, which they clearly were.
And the premium holds. It's both.
And the premium holds. But that's the thing. So you're assuming that it's always going to stay that way, because now, right? So you're underweight anyway. And if you took loans for that, to your point, now you've got to make up for that loss. And you're in a real bad spot.
Well, and my understanding is, on top of all of that, 3AC was using their GBTC shares as collateral. Maybe not for all of their loans, but with the lenders, they were using the GBTC as collateral. So if that is the case, and if that is true, that means, you know, even as the Bitcoin price is either, in the last 4 months or whatever, it's been going straight down. not only are you losing the underlying collateral value,
right?
You're also it's trading at a further and further discount. So you're actually losing value of your collateral faster than just the overall market. So it's not great. It's not great.
That's unbelievable. So essentially, they were taking this $1 billion that they had and using that as collateral, which I don't think there's a way to put a marker on that other than a document saying, "Hey, you get access to this."
Right. Well, yeah. I mean, the shares. I suppose I'm not sure how the custody of shares work.
Like, what's to say they weren't double or triple or quadruple? Using that.
I think there are accusations that they were rehypothecating funds, and that there's fraud going on in attestations to the lenders. So we'll see. I mean, I think a lot will come out in like the court filings that will sort of open things up. But I mean, just from the limited knowledge that I have and sort of the ear to the ground that I have with some of the lending desks, the lending desk that didn't do a lot of business with 3AC, they're sort of taking a victory lap, which is fine. They deserve that. But, they said, 3AC would never pass our onboarding, our weeks long due diligence and onboarding. They would just say like, never mind.
Really?
And at the time, it was easy to do that. Why? Let's go back to the first word that we used, reputation. Because every lending desk was like, and Voyager they pulled out. Voyager was originally using Celsius for all of 100% of their yield. And they were really proud of that. There's a good relationship there between Voyager and Celsius. They then were pretty public about, hey, we don't use Celsius anymore. But they never said who they used next until all of this. It became very apparent. I think 65% of their lending book, don't quote me on that number, it's somewhere between 60 and 70%, was with 3AC.
No words. You know what the hypocrisy of this is my last thing. We'll kind of jump into what Sam's offering and how this kind of rolls because we're already 18 minutes into this. What is kind of disappointing, and I'm kind of just talking my thoughts out, but it was in one of the articles that we were reading about this and kind of passing back and forth. What's disappointing to me is that these guys who, turn out to be very, very underqualified for the role they had, but were supposed to be espousing crypto values, were skirting using the crypto tools at their disposal. And what I mean by that is there are lending protocols where none of this is an issue, where you have to deposit collateral to take out loans. And if you get below your collateral requirements, your position's liquidated and it does not cause systemic damage, okay? You could have played within your means and done just fine based on their reputation. They did not have to go to the lengths that they did. And they could have used the tools that have been created on Ethereum and other chains to get those returns. And so
not the same returns. Not the same.
Right. But that's exactly where I'm going. The point is, this comes down to greed. It's just pure and simple greed. And they're guys who acted dishonestly based on reputation, promise shit they couldn't do. I don't understand. Really what they have going for them is that they're based in Singapore, Dubai, and the Virgin Islands or whatever it is. Like, they're going to skirt this, but I would not sleep well if I were them the rest of my life. Not because of just feeling bad. I think that they're going to have some people after him.
I think the last point I would make on this is that this is a surprise to us. Remember that it's not a surprise to them, right? So like they didn't wake up one day and become insolvent. Like it's a lot of little steps of bad decisions and justifications. They're like, we made a bad trade with GBTC. We'll take a loan. Like, we know what we're doing. We'll make it back, right? Like you have the same thing as a personal trader, I would imagine, is like you suffer a big loss and you're like, no, I know what I'm doing. I think that's a story for most traders.
100%.
And so like at this, I agree with part of what you said, but I do think that in some ways they embraced the crypto ethos. Like they were going on up only and talking about the super cycle. They were overexposed. Like no one would have benefited more from a super cycle than them, right? Like you have to imagine that they believed some of that. Because otherwise...
But couldn't you say right now that it is possible that was all a show for them to continue their Ponzi scheme? Because let's be honest, they were essentially a Ponzi scheme. They were getting in and out, taking loans, paying off, moving. Because like if you follow what you said through to conclusion, they were underwater and then taking out additional loans based on reputation to try to make plays to make up for what they had already lost. So you're like, what makes you different than? I mean, they didn't have a bunch of personal houses, I guess, that they were investing on behalf of and guaranteeing returns. But short of that, how do you know this wasn't just some massive charade?
Yeah, I guess I would say the way that it's not a completely massive charade is that there are assets there, right? Like I assume they're in the hole now, but there were assets there to be promised. So it's like they've done better. Not now. Like my joke to you, what is it, like 3 weeks ago, was like, hey, we're better traders than 3AC. Like that was, but like, you know, they got to where they were based on something. They're not complete idiots. I don't believe that. I think take a small step, and suddenly you have a really big problem. So let's talk about now, like, I think the SBF story in all of this is really interesting, specifically as it relates to Voyager, because this week I was really surprised. Out too. So, like, I'll take this from my builder angle.
Talking about here. So like lay out what. Just make sure you set this up. Go ahead.
Okay, yeah, I'll do my best. So as a result of Voyager using 3AC to generate yield on users' assets, Voyager first limited the number of withdrawals, or excuse me, the number of dollars of withdrawals per day to, I believe, 10,000. They did that for maybe like a week and a half, 2 weeks. Then they fully shut down withdrawals. So that means that if you're using Voyager, which, by the way, many retail folks are, it was a retail-focused, publicly traded in Canada exchange, right? So like the stretch between the retail perception of Coinbase and Voyager, not that far of a leap, right? Different subset. And like Voyager, in my opinion, really started to take off when you had mainstream finance heads starting to talk about it. Like Voyager contracted with the Nigerian brothers, CNBC, long ponytails, like you probably know them. Crypto Rebellion is sort of their, like, I think we can call it a pig group. Like that's what it is. And so like they were pumping Voyager. Now I don't see a lot about Voyager from the Nigerian brothers anymore. And I assumed that marketing contract ran out and they moved on to the next thing. But like that was their audience, retail folks who were brand new to crypto this cycle. Because if you're in a previous cycle, you probably didn't use Voyager. I would say the majority of their user base is this cycle. So brand new folks. As a result of those funds being now locked, they've filed for bankruptcy. And so their version of bankruptcy that they are going for is a restructuring version of bankruptcy. This means that they now have a chance to go out and put out a plan and say, hey, this is how we're going to continue to operate the business. And this is our path towards some type of like solvency or redemption plan for users. And their redemption plan that they've sort of laid out is a combination of cash. Cool. I like it. Let's assume that I am a Voyager depositor. Okay. And I have funds locked on Voyager. I hear that their plan is cash. Cool. I like cash is fine. I would like my cash. Voyager token. No thanks. I'm not interested in your shitcoin that's completely worthless because you're insolvent. Future Voyager equity. No thanks. I'm not super interested in that. You're publicly traded. You think like anyone that's bought Voyager stock is super happy to own it right now? I'm not really interested in owning that either. And then I believe also some crypto. So that is their sort of like plan, is like, this is how we make a user whole. You get some cash, a very small portion of your total assets. You get some Voyager token, which everyone's going to get at the same time. So what do you think is going to happen to the price on that? Who's buying that? Right? It's for you to be able to sell. Someone else has to be able to buy, or someone has to take the other side. So who's going to be there? That's going to be fractions of a penny. And then this Voyager equity, which, what am I going to publicly sell in Canada, I suppose? And so like that, you have to have a buyer there too. Not a great option. So my understanding is earlier this week, SBF or Alameda or whoever the legal entity is there, let's just call it SBF in this case, puts out an offer, who, by the way, owns a very large portion of Voyager stock. I think it's north of 10%. I hope I'm not wrong about that. I think it's 10 or 11% of Voyager. I'm open to being wrong about that, but I believe that's accurate. They are a lender on Voyager. They are a creditor of Voyager. So like they're very, very involved. But they said, hey, how about this? Voyager users, depositors, I guess they're now creditors of Voyager, can access immediate liquidity today. We will purchase the entirety of Voyager's crypto assets, right? So imagine every crypto asset that is on Voyager. It's going to be some Bitcoin, some ETH, and then a long tail of shitcoins. We're going to purchase all of that. We will give you, the user, cash value of that today. Let's say it's today. All you have to do is sign up for an FTX account. You probably link that with your Voyager account somehow, and we will give you that cash value today. Now, what that allows you to do is get long again on crypto. So I am now very confident that SBF believes this is the bottom for crypto. And I can tell you that because of this offer. What SBF is doing essentially is purchasing all of Voyager's assets, all of Voyager's customer assets, for cash value today. If you believe that crypto has another 50% drop or 70% drop from here, why would you buy all of that today? Because you don't get that crypto today. Now they continue to have to go through that process. So you give all of these users liquidity, immediate liquidity. They're not going to get full value. If you have $10,000 on Voyager, it's very likely that you get access to something, I don't know the exact math, but let's say $5,500 to $6,000 of that total value, but you get it today. Plus you get you have a right to anything that is recovered from 3AC in the future. So you aren't losing the upside, the other part of your money, if it's ever recovered from 3AC. I don't believe that it will, but that's not an argument. You aren't giving anything up. But and Voyager has pushed back on this. And the reason Voyager has pushed back on this is simply because they're looking to maintain as much enterprise value for Voyager as possible. Because you have a board of directors, you have a bunch of investors, you're now a public company, so you have a ton of investors. You have employees that you'd like to keep employed. You'd like to keep the business running. And in this model, you are basically giving it all up to FTX, because now all these users have to go create an account on FTX to get the asset, to get access to those assets. You think they're ever coming back to Voyager if you wrap that up in any sort of positive way? No, those are FTX users now. So I think this is a good offer. I think it's good for the user. I don't think it's good for Voyager, but I don't care what's good for Voyager at this point. I care what's good for the user.
It shouldn't be good for Voyager. They fucked up massively.
Yeah. And so,
I mean, so at the same time, I do get what they're trying to do. I mean, if you're a publicly traded company, you have a fiduciary responsibility to try to protect the value of the people who have invested in you. In fact, you can be sued if you don't. So I get why they can't be like, sure. It would have to go through some sort of voting process for shareholders to approve something like that, because they can't just.
I'm not sure. I'm not sure how that works. Now that there's bankruptcy involved, I'm not sure that. I think you probably can. I think you can probably say, like, we've done our best due diligence that this is the best option on the market, and that's what they're complaining about. Is like, because SBF and others went public with this idea. Right, it wasn't part of the process that Voyager wanted them to go through. They wanted every party who might be interested submit your bids privately, right? And now we can play these against each other, and we can find the best offer. SBF didn't do that, and I think the reason that SBF would want to go public with that is because now you have an army of Voyager. Users who are like, customers, clients, and saying like, hey, I want my money. And now there's pressure. So it's actually a really smart business move, right? Like SBF now already has to write off any value that they bought in the Voyager stock. That's going to be zero or close to zero. I believe they said that they would write off anything that Voyager owed them in terms of like
loan claim against Voyager Digital. So essentially they're saying we'll eat the $75 million if you do this.
I mean, it's such a smart move by FTX. I'm like sort of jealous. You're buying users. You're acquiring distressed users, and your bet is that some portion of those users that come over and take the 55 to 60% of total value are going to then get long crypto on your exchange, and they're going to stay as users. And that's probably a good bet. You know, some portion of them will. You're buying the users. It's a great move. I think Voyager is understandably selfish for not
You know,
accepting it.
my question for you would be this, and I know Sam's background, I guess. I think you probably know it better than I do. What makes Sam able to do this so much better and play chess while everyone else is playing checkers? Because to your point, how you started this was, why would you be offering to buy all of these crypto assets where they are right now if you didn't believe the bottom was in? And he's probably right. In fact, I think, as I talked about yesterday on my stream, I think we have a nice end of the year, at least. But the thing is, like, what's the downside for him? He either's going to buy an asset that he thinks will go up, and he would have a direct hand in helping go up.
Well, the downside is he's wrong. The downside is he's wrong, and this is not the bottom. And now you have, I don't know what the client claims on Voyager. So it's $1 billion, 1.6 billion maybe. Now you have $1.6 billion of crypto assets that like you're not happy with. So like that's the downside, is that you're wrong. And the other part of being wrong is you open up these all these new users to FTX, and a tiny portion of them stay. Like less than 10%. That would be an L, a big loss. And then that's how you lose. I don't think those things would happen. I think it's a good move, but I am of the firm belief that Sam's a smart guy. I've been on multiple calls with Sam. He's a very smart guy. No one is contesting that, but it's not just the Sam show anymore. I got to meet with Brett, the CEO of FTX US last week. He's also a really smart guy, and they've got a bunch of smart people around them. I find it amazing that they're able to keep the FTX sort of umbrella of employees so small. Those are a very efficient group of individuals, but it's not just the Sam show anymore. I'm sure he's driving it, but they've got the best in the business making decisions.
Well, the thing is, the only person in crypto that has greater reputation than 3AC would be Sam, right? Like, he invests in things quietly, but Sam is the next iteration, or the only thing that could potentially be greater than that. But I guess,
CZ. That's CZ has good reputation.
But CZ has the whole, he has some pretty heinous claims against him that have never been substantiated, that you just don't see that smoke with. I think that's Sam, in my opinion.
That's okay, but that's Western bias, right? Like,
you think so?
Yes.
All right.
I think that's Western bias.
That's fair.
That's my opinion. I think that it's a good offer. They're making good plays. Voyager should accept it, and they should move on. They should do what's best for their users, and that's my opinion.
Could you imagine now? So here's why I think that that's actually a good play for Voyager clients, even if they don't end up taking Sam's offer. There's now a public bar out there for, if you accept a deal that's any worse than that for your customers. Mm-hmm. How are you going to explain that?
It's possible that they can't now, right? So I believe a majority of the decision making is probably out of like Voyager's hands, and it's with whichever firm they hired. I don't remember the name of it. I believe it's the same one that Celsius hired. I don't remember. It's some law firm with like 3 people's last names, so it's not all that memorable. But but I don't know that it's up to Voyager exclusively anymore. It's going to be up to that firm, and so I don't think they can take an offer that is quote unquote worse. But yeah, that's the bottom according to FTF. SPF is in because of this offer. You would not make this offer if you didn't think the bottom was in, is my opinion. And Sam can't do what he was doing 2 years ago. You're not going to see Sam talk about Solana or Maps or Oxy or any of the other sort of like SPF tokens ever again like he did before. So in my opinion, this is the best sort of signaling he can give these days. And so for all of those people that remember sort of like Sam being a bellwether 2 years ago, he can't do that anymore. This is the next best thing. And so I'm taking that as my sort of signal, as it's if it I'm the yeah you know me too well. It's like that's my classic. That's my classic. God, I'm deploying.
That's awesome. Good. I mean, I don't think you're wrong. Like I said, that's kind of where my brain is too. I've waded back into I told you I was going to try to buy Ethereum at 750. I didn't get that. I got closer to 1,000, but up a good amount. I did take some off the table recently. I'm probably going to load back in, but anyway, that doesn't matter. All right. So speaking of things outside of our control, whether or not there's a bottom, there's one thing you sent me this morning I think is worth talking about because it's topically relevant for when this goes out. And it was an article on CoinDesk that you said, the bottom's in, things are outside of your control. Hopefully we get better from here. We should start deploying. But one of those things that could potentially stop that is the article that you sent me this morning. And the article headline reads as follows. SEC probing. No?
Oh, yeah. Sorry. This is the article.
Okay.
I'm wrong.
SEC probing Coinbase for allegedly listing securities. Report. The investigation predates last week's insider trading lawsuit, according to the report. So we have insider trading and the SEC saying, hey, we think you're listing securities now.
Yeah, I think this article is interesting because it actually goes against some of the narrative that we've seen over the last week. So when the SEC dropped, I guess, charges against the insider trader at Coinbase, which is an interesting story in itself. Probably don't have time for here today, but a lot of the industry was alleging in that lawsuit or in those charges, they called them securities. Those I think 4 or 7 assets, and so Coinbase came out and said, "Hey, no, we don't list securities. Like, do not call them securities. Those are not securities." And the industry sort of like reacted aggressively towards the SEC. They said, "You are regulating by enforcement," and that's generally not what they're intended to do. And so they said, hey, this is the SEC's way of sort of like getting their foot in the door. They use this insider trading suit to say these are securities, and now they're going to make a big deal of that. This article, if true, goes against that. This article alleges that the SEC had started to investigate Coinbase for listing securities prior to the charges against the insider trader. I don't remember the guy's name. And so I think that is interesting because that means that this has been ongoing, and they did a pretty good job of keeping it under wraps. And I believe I read that Gary Gensler suggested to Coinbase to register a specific type of exchange as a specific type of exchange. And then I'm sure they'll make that process near impossible. So, hey, thanks for the suggestion. But I think that's interesting because that is going against what everyone thought for the last week. That means that the SEC, if this Coinbase article is true, which I don't have any reason to believe that it's not, will go after Coinbase and then the next one and then the next one for securities. That would make me very nervous, and I'd be interested in your opinion now as a trader for all of the non-majors. Because if you are a non-major and you're listed on a tier 1 exchange, in my opinion, you are now a target. If you're a holder of one of those, the team is one thing, right? Like, I wouldn't be super interested in working for one of those, but as a holder of one of those, just imagine the headline comes out, SEC, fines Coinbase X dollars for listing these assets, and your coin is one of those. I don't see how that doesn't take a 30, 40, 50% drop in it.
Probably more.
But tell me the trader's perspective.
Yeah. Well, look, for a long time, well, two points of clarification first. One, you're right. It was 7 cryptocurrencies listed on Coinbase. They were AMP, RLY, DDX, XYO, RGT, LCX, POWR, DFX, and KROM. And you go, what the hell is that? And that's kind of me answering your trader's question because for the longest time, I'm going to go ahead and say at least a year and a half, I have refused to touch anything on Coinbase or anything even being remotely close to being listed on Coinbase. So, and the thing is, when something reaches Coinbase, its cycle is done. Its cycle is done. It's untradeable for me, and it's unholdable for me. Now, I have changed my risk profile as I've done well in crypto, and I don't really wade into that pool as much unless you truly find something that's groundbreaking. And for me, the things that end up on Coinbase like that, it's always felt really weird as to the things they choose to list and not in like kind of jokingly, I would say to my trading friends, they have to be paying Coinbase like for them to be doing this. So they have to be just saying, look, do this for us. We'll give you some, you can cash out. It almost felt like there had to have been a backwater deal. I know. I don't believe there is either. But I'm saying the joke would be there was no method or madness to things being listed to where you were like, where the fuck did that come from? Why would they be listing that right now?
I don't know any of those 7 assets, but I mean, the first place I would go to is go to each of those 7 assets, look at the money that they've raised in pre-sales or equity rounds, and see if Coinbase Ventures was involved. Like that's the only guess I would have. I don't know any of those assets, so I don't know. But I would refute the idea, and I think you would too. Coinbase is not accepting payments for listings.
Very much tongue in cheek. Yeah. Very much tongue in cheek. But my point in even saying that and joking about it with my buddies that I sling with in the decentralized world is literally not anything that's groundbreaking, not anything that has upward momentum. And as a trader in this space, it's all about narrative momentum and paradigm shifts. And you have to catch those things as they're happening and ride the wave. Because I think even people who trade like me quite frequently, I'm not looking... When I trade, usually I'm not thinking it's Ethereum. I'm not thinking it's Bitcoin. I'm not thinking it's something that like, even Solana is kind of suspect, right? Like there are things that have waves that have narratives and you get in and you get out. And like that's not different than IPOs, right? Like I was talking about Datadog, D-Dog the other day with one of my old equity trading friends, and we played that IPO like crazy because they were going to do something different with managing data in the stock world. We rode that wave and got the hell out and it crashed, right? Like it's the same thing. And so when I think about Coinbase and what they list, there is no method to me that makes sense. If it was on like, hey, we're going to only have blue chips, they would list what? 15 total tokens or coins?
Yeah, well, right? You would see FTX US is taking that approach. Like go look at the assets on FTX US. It's a smaller list, and you've probably heard of all of them.
That's what it should be.
But here's so if I had to play devil's advocate to that point from like the business perspective, if you're Coinbase, you actually have quite the incentive to try to be ahead of that narrative curve, because what you don't want to do is play catch up. If any of those 7 projects or any of the long tail assets on Coinbase catch a narrative and then you list it, it's probably too late. You have to have those assets before they catch the narrative if you want trading volume there. And so like I actually heard Jesse, the CEO of Kraken, talk about this when it came to I want to say it was Dogecoin. They didn't list it for a long time, listed it a little bit too late, right? Like because it was already available everywhere else, them listing it didn't meaningfully make an impact to the business. Right. So the only devil's advocate point I would make for Coinbase is they want to get ahead of that narrative because it needs to be there when the narrative catches. Otherwise, the narrative is happening on Uniswap or Binance or, insert other.
I don't think you're. So here's the thing: first wave cycles are always going to happen on decentralized chains. Always. This is not the 2017 cycle was on exchanges.
That's new though,
right? And so that's all shifted now on chain. And so I have a bunch of friends in my normie life who ask me like, "Hey, what's next?" And I'm like, if you're not willing to get on and play in decentralized world, you're going to get the secondary run of what's next. It's just not going to happen. And so I understand that Coinbase needs to make money, and they make money off fees. Right? And users. Mm-hmm. Now their fees are asinine. And my brother-in-law was this close to going to work for Coinbase. And I was like, I don't know, man. It's a good company, but I wouldn't go there. I just wouldn't. I'm like,
well, hopefully you didn't tell them that before they went public, because you just robbed them of
this was not long ago. This was This was actually before Breakdown, which later on I got stake in this. And I wouldn't get in there. That was before they froze holding or like rescinded offers. Like he actually ended up thankfully listened. But I think that Coinbase does some really weird shit. And so I like if you were to ask actual traders, not people who just like to like throw money into Coinbase, no one uses Coinbase. But at the same time, and they even said it, they said it in their last quarterly report. They said people mainly use us for onboarding and offboarding.
That's probably... Yeah. I mean, I'll believe you on that. I didn't read that, but I also wasn't looking, so I believe that. I would say that the interesting part to me, if let's spend 1 minute on Coinbase fees and then sort of like move on. But I would say the thing about Coinbase fees is that they are high. I would call them close to egregious. They are egregious, and they're still not profitable. Oh, they're still not profitable.
That's unbelievable.
That's weird. Too many people, way too many people. And they spent something like more than $100 million, if I remember right, on the NFT platform that, was uneventful. So yeah, Coinbase has a slurry of its own problems just from a business standpoint. I think SBF sort of has shown them the roadmap. Coinbase needs to cut their headcount by like 50%. Not stop hiring, not rescind a few offers. Like, you have to run that business way more efficiently, because you can't charge those fees forever. If crypto is anything like traditional markets, fees will forever trend towards zero. Now, I don't think they'll get to zero in crypto like they did in traditional markets, and that's a different subject on why, but they will trend towards zero, and Coinbase cannot be profitable as it trends towards zero. That's why they're switching to the subscription revenue model, right? So like now I forget what it's called, but it's like you get this Coinbase membership and it's X dollars per month. Like, you just need a couple million of those. But anyways, for sake of time, I think we should jump into the Bitcoin versus ETH long-term value, because this is something that I think could give, we could give some perspective on where to go next, because my views on this have changed recently. You've been much more fluid than I have. I'd say.
Hold on, say that again,
right.
Real quick,
So
if you wouldn't mind.
let me pose a question to you.
All right.
Yeah, you've been right. But let me pose this question to you. Back in 2017, if anyone listening had been around there was a time period where you denominated your portfolio in Bitcoin. Everyone did. And if you didn't, everyone thought you were an idiot, right? Okay, so everyone denominated their portfolio in Bitcoin. If you were going to go trade a shitcoin, you didn't care whether it went up in dollar value. You cared what it did versus the Bitcoin pair, because that was the alternative, sitting on your hands and doing nothing. I think we've moved away from that as an industry. I think much more people denominate their portfolio in dollars. I am one of them. And right. I sort of changed that point of view going through the bear market of 2018. I didn't care what my portfolio value was in Bitcoin, because I had a ton of it and it wasn't worth anything. So like, you know what I mean? So I changed my point of view on that. I think most people have. Can you talk us through, I think you also changed your opinion, or maybe you always had this opinion, but you like to flip-flop. Tell me about that.
So when you say flip-flop, just to clarify your question, are you talking about like how I think about my portfolio denomination, or based on just like my overall trading goals? Yeah.
I guess talk about whatever you think is more interesting, but what I find interesting is the fact that you flip what you denominate your portfolio in. Whether your base is now Bitcoin or your base is now Ethereum. That's how I view it. Maybe I'm completely wrong.
No, you're right. You're right. Now, I go through waves on this, and like you said, being fluid. I think I go back and forth because I'm met with this simultaneous push and pull about what's going to happen with crypto, and the way that I view it is this. I do not think Bitcoin is going anywhere. I think Bitcoin will stay. It will persist. And for all the Bitcoin maxis out there, I do think that the end game for Bitcoin is very high, very good, and replaces the world currency. But I'm not convinced that happens even in our lifetimes, okay? I'm not convinced that happens. I do think there are narrative shifts. When you look at inflation, when you look at what's going on with monetary supply, when you look at more Bitcoin. But what I've come to recently, when I've come to kind of accept recently is, I've been reading the new Ray Dalio book about, essentially debt crises and like falls of empires and whatever it may be. And the USA has done an incredible job of ingratiating themselves around the world economy to where that it's going to be really hard for the dollar to fail over a short term. Will it happen over long term? Yes. But even now, we're not close to that happening. So I think that when I'm deciding what I'm going to do, I go, look, yes, I do think that we end up at Bitcoin eventually. But what really excites me now is Ethereum. And I want to acquire as much Ethereum as possible, because the disruption that Ethereum can cause is real and tangible. They're creating products, they're creating things on the Ethereum blockchain or on other non-Bitcoin chains that will disrupt multi-billion, sometimes trillion-dollar industries, and they're being built right now. Okay, so I think from a short to medium term perspective, I'm acquiring as much Ethereum and as much crypto that are going to be paradigm breakers, paradigm shifting innovations, because I think that's going to give the greatest yield for a long time. I'm talking could be years, could be decades, while the dollar runs through what I believe will be its final stage. And that, again, we could be 65 years old by the time that actually comes to fruition. So I want to look for disruption. Things change. Like my first crypto I ever bought was LID. Okay. And then you started to see things actually develop, like lending protocols, like on-chain trading, like all these other things that are just like very simple, very linear. And now we're starting to get into things that are actually solving real world problems like Web3, like security, like account management. So to make a long-winded answer a little bit shorter, I do think Bitcoin's not going anywhere. I think I'm still going to always think about it as my end game. But right now, Ethereum and the ETH 2.0, 3.0, 9.0, whatever the fuck iteration we're on, is actually disruptive and is more like the .com revolution in the 90s, and it's happening right now. And so that's most important to me. Does that answer your question?
Yeah, I think that's an interesting point. It's a narrative shift. Again, like crypto, at least right now, trades on narratives. And I think really hardcore Bitcoiners have sort of lost the narrative because the digital gold narrative I still think applies, but is damaged right now because it's still considered a risk asset. Until Bitcoin is no longer considered a risk asset, it can't perform like a digital gold should. That's okay. It doesn't have to. Right. As long as that narrative is strong enough, it doesn't have to actually perform. If enough people believe it, it's the US dollar. Enough people believe in it, it doesn't necessarily matter. But what I would say is like, what Bitcoin has going for it is the digital gold narrative is believed by the younger sort of up and coming generation, which we know will be inheriting a lot of assets. So you have a really large asset base held with like our parents, boomers, grandparents, and that asset base will be passed down. You'll have less gold holders and theoretically more investors who are interested in crypto. That is the Bitcoin narrative to me. Now, you lost some of that. It's damaged. The Ethereum narrative, I think right now, like you brought up, is strong because it's being used for something. It's accomplishing something. And I think that's important. But the sort of stopper that I have is it has problems that need to be fixed. It's easy to kind of like forget that 6 months ago, I wrote this really long Twitter post about how Ethereum is useless and I moved all of my Ethereum into Solana. That happened to be a really, really good financial decision. But like, where's the Solana narrative now? It's had many of its own problems. Ethereum has a bunch of problems. And so I hope that the next 6 months, the next 12 months, there's a lot of progress on Ethereum because I think when Ethereum has its issues, it opens the door for a layer one to come and take market share. So that's where I think I would leave like that subject. It sounds like, tell us for the next 12 months, what are you basing your portfolio on, Bitcoin or Ethereum?
Yeah, it would be Ethereum. It would be Ethereum. I think next week we should talk about the merge. Next week we should talk about a few other things that are coming up because I think a lot of the issues that you still have with Ethereum, they're trying to resolve one step at a time. And the merge is going to allow for, ZKs. They're going to allow for other roll-up side chains that will make this a lot easier, a lot more affordable, and a lot more tenable. Because I think that I would rather have Ethereum exposure while it's figured out. Now, I would say that Bitcoin maxis would tell you that the Lightning Network is starting DeFi, which is intriguing to me. But then you're kind of running against your own value base and trying to create DeFi on a token that doesn't really matter. The ridiculous
part in my mind is the Bitcoin maxi mindset is, okay, you're talking about how great Lightning is and how it can be used to... It seems like they start to shudder anytime it's used for anything else other than payments. Like, please just pay me. Please just use it to pay someone. Please pay someone. Yeah. It's please don't do anything else. Just pay someone in it.
Right.
Okay, I get it. But if you're like then also saying, well, the Lightning Network, you can do all this other stuff on it, but you don't use any of the other stuff, it's not interesting anymore.
You're cannibalizing your message for something that doesn't actually have usage.
That was a better way. Yeah, you basically put what I was trying to say in much better terms. So thank you. I think that's absolutely right. I think that this was a great first episode. We should definitely do it again. Do you want to close this out?
Yeah. No, I think this is, like you said, a very, very solid first episode. I think we talked about some good things. I actually have a couple ideas for next week. And I also want to talk about culpability of spreading the message because, and this will be like my teaser for next time. What about the people that helped elevate 3AC? What about the people that helped put them in a position to cause damage? Are they liable too? I'm curious. I'm going to talk to my I have an uncle who's an attorney. I have a couple others, and I'm curious about what he would say about that, right? Because there's some very prominent people that put them up on a pedestal that have now led to the loss of hundreds of millions of dollars. So I think we got some interesting thoughts on this. Hopefully you guys enjoyed this one. Alan, I appreciate you being here, my brother. And let's do this. Let's do this next week.
Fun as always. Talk to you soon.
See you guys.